What's up everyone, it's Caddy with Money Vesting. In this video, I wanted to talk about a much bigger problem that we have on our hands because there's been a couple articles that have already been released about this. And I've been meaning to do a video on this for quite some time. And there was another tweet from Genevieve on Twitter to which Elon Musk also responded twice in the last 14 hours. So I wanted to talk about this in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. There is a 16% annual discount available till the end of this month. So you can get access to all the buy and sell alerts, options alerts, trade ideas, and all the other updates and private videos that I plan on releasing very, very soon. And we're going to be starting with our wheel strategy in April upcoming next week as well. So all the links are going to be down below if you're interested in joining. So the thing that we are going to be talking about today is going to be de-dollarization. It is simply a process of slowly and steadily kind of ditching the US dollar for all international trade. And that certainly puts an impact on the value or the strength of the US dollar. And there's been a couple articles about it already. So first of them is going to be Saudi Arabia, one of the large exporters in the world for crude oil, considers accepting Chinese yuan instead of dollars for Chinese oil sales. This is a big deal. And I don't see a lot of coverage on this. And the reason why this is so big is because we know the US dollar is the global reserve currency of the world. But if you read further, Saudi Arabia is in active talks with Beijing to price some of its oil sales in China in yuan. And a move that would dent the US dollar's dominance of the global petroleum market and mark another shift by the world's top crude exporter towards Asia. And the talks with China over yuan-priced oil contracts have been off and on for 6 years, but have accelerated this year as Saudis have grown increasingly unhappy with the decades-old US security commitments to defend the kingdom. And China buys more than 25% of the oil that Saudi Arabia exports. Now, I don't know if that's fully correct, but it might be. I looked at another report that suggested 15% from Saudi Arabia and 14% from Russia, but that might have changed a little bit. But we also know that Xi Jinping met with Putin and also mentioned that there are some big changes coming, and Russia is also committing to supplying China the oil and of course accepting Chinese yuan. If priced in yuan, those sales would boost the standing of China's currency. The Saudis are also considering including yuan-denominated futures contracts, also known as petro yuan, in the pricing model of Saudi Arabian oil company known as Aramco. Aramco is one of the largest, if not the largest company in the world with respect to market cap. Now, this was another report that came out literally yesterday, March 28th, actually a couple days ago. China and France complete the first yuan-settled LNG trade, signaling the end of the US dollar for these energy trades. Let me just break down exactly why this is so important and how it actually works in the foreign exchange markets when it comes to international trade and settlement. So what we have over here is a very, very simple infographic and representation that I've created. And what happens is when China needs oil, it's going to go to some of the largest exporters in the world. We've got Saudi Arabia and we've got Russia over here. And what they do is they obviously supply the oil and gas to China, which obviously is going to be one of the largest importers. And then in return, this is the current model, right? In return, it provides them dollars, right? US dollars, because that is the global reserve currency of the world. And of course, it's been utilized for many, many years to actually trade crude oil and other commodities, gas, all commodities in the world traded in US dollars. So it receives oil, it provides dollars. What happens, right? China needs to hold US dollars in order to make those transactions happen. And these countries, for supplying the oil, also receive US dollars in return. So both countries get US dollars, right? One of them has to keep them because they're buying commodities, and the other one will receive them in return for supplying these commodities. So as the demand for US dollar grows, right, the strength of the US dollar also grows relative to other currencies in the world. And as we have already seen, of course, the US dollar has been performing really well. And of course, it is one of the most strong currencies in the world. It's one of the strongest currencies in the world. But the way we're headed, the direction that we're going into, where this is going to be the newer model, if China starts providing Chinese yuans to these countries like Saudi Arabia and Russia, then what happens is that their dependency on US dollar starts to come down. Earlier, they were getting received in US dollars, and China also was holding on to a lot of dollars because they wanted to make that transaction happen. But with this shift, what happens is they no longer need to hold on to as many dollars, and they can simply hold on to their own currency and provide that currency to the net exporters, Saudi Arabia, Russia, and all the other countries that export oil and gas all over the world. And of course, this is just one example, one simple trade. There's markets for corn, markets for rice, wheat. I'm going to go over India as well. But if they start receiving in Chinese yuan, then their dependency and their reserves, their dollar reserves also start to go down. And what happens then is if demand starts to come down for US dollar, well, it starts to lose its value relative to other currencies. And more importantly, Chinese yuan is the one that's actually going to start to gain some strength as a lot of the transactions are happening in that currency. That's why it's such a big deal. That's why it's such a big issue that we need to discuss. And Genevieve also mentioned 14 hours ago, she tweeted, the US dollar is losing its reserve currency status. Here's what you should know. And Elon Musk replied to her twice, 12 hours ago, serious issue, he says. US policy has been too heavy-handed, making countries want to ditch the dollar, and combined with excess government spending, which forces other countries to absorb a significant part of our inflation. And eventually you will see a lot of countries kind of bypass the US dollar and move away. So US dollar has been the backbone of the global economy for decades. Several countries even use the US dollar as an official currency, like El Salvador, Panama, and Ecuador. In 1944, the Bretton Woods Agreement established the US dollar as the world's reserve currency. 44 countries agreed to the global monetary system that would be the underpinning of the US dollar, which in turn was backed by gold. And the gold standard has been broken by the US twice, not just in 1971. She mentions 1971, where Nixon ends the convertibility of US dollars to gold and announces wage price controls, but this was also, the gold standard was off in 1930s. Ray Dalio goes over that in his video, Changing the World Order. Definitely do check that out if you haven't already. But this again becomes a much bigger problem when Russia and China look to shift the paradigm, and Russia and China sign a deal to bypass the US dollar. And this is obviously called a de-dollarization. Again, it's a big problem because a lot of the US debt is denominated in US dollar, right? If a lot of demand starts to go away, if there's a lot of supply for bonds, for government bonds, for US dollar, what happens, right? Prices start to come down, the value of the currency starts to weaken, and as a result, interest rates start to go back up, and we have a catastrophe on our hands with respect to the debt that the US is carrying. De-dollarization is happening everywhere. Central banks bought gold at a faster pace last year than they have in any year since 1987. And this signals a desire for countries to back their own currencies with gold rather than the US dollar. India, China plan to trade in own currencies and cut US dollar dominance. Now, again, in terms of India, we don't have a lot of updates. India tries to stay pretty much, stays abstain on most of geopolitical issues. But again, I'm going to be doing some more research on that as well. If the goal really is to boost the own currency. And I think in the future, if there is any type of serious de-dollarization happening, if there's more, if this accelerates to a whole other level, it's not going to be that dollar is going to be completely replaced by another currency. I think there's going to be more competition between different currencies, right? Dollar, of course, is going to start to lose its relevance on a more global platform, but it's not like it's going to be replaced by Chinese yuan, right? It's not like that. It's not like a simple transition away from dollar over to yuan. But I think it's going to be more about losing its relevance and then other currencies becoming more and more competitive in nature. I'm going to go over some of the threats and some of the consequences of what that's going to look like in just a minute here. But today, trade is shifting away from the purview of the United States dollar. Take a look at how the volume of Chinese-Russian trade denominated in yuan has spiked since the start of 2022. Now, this chart was actually quite alarming. If you take a look at, of course, China basically, buying oil from Russia and Russia paying them in Chinese yuan, ruble one trade volume skyrocketed after Russia's invasion of Ukraine. And of course, that's resulting in the lower relevance of the US dollar. This is going to be the world foreign exchange reserves, and this right here is going to be foreign exchange reserves in other currencies. And what you'll notice is the dollar dominance, again, the reserves that other countries actually have of US dollars have been coming down since 2000. So they were at one point a little bit over 70%, and now we're sitting at 6%. So over time, we are seeing a little bit of a pullback in the current US dollar reserves in other countries as well. And this right here, I forgot to mention it, but let me just go back here. And what I'm going to do is I'm going to actually share this very, very quickly. So let me just bring that up. Boom, right here. So this is what the actual consequences could be for this de-dollarization if this actually continues. So there's obviously going to be reduced demand for US dollars, right, which is going to potentially hurt the strength of the US dollar. Selling off in US dollar reserves, right? So if anybody's holding on to US dollar denominated debt, right, which is a government treasury department debt or corporate debt, whatever it is, there's going to be some level of selling because countries don't want to hold on to US dollar reserves anymore if they can trade their commodities in their own currencies or other currencies that might be favorable to them. Number 3, threat to the US dollar as a reserve currency, of course. And number 4, there's going to be increased competition on a more global scale if Chinese yuan, Indian rupee, the euro, all these currencies start to gain more relevance from an international trade standpoint. So definitely want to keep this on your radar. It is something that I'm watching very closely. I'm trying to do as much research as I can, and it's been discussed very much in detail in the book Changing the World Order by Ray Dalio. And there's another chart. I wish I could show you. I don't have it right now, but maybe I'll go over that in our live stream. But it pretty much shows us all the reserve currencies in the world and how long they lasted over the last 500 years. So it's quite an interesting graphic that I'll probably see if I can show that in the live stream as well. But yeah, let me know your thoughts down in the comment section below. What are your views? What is your perspective? I would love to know. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.